Most people think a market crash looks like 2008, panic on Wall Street, banks collapsing, and suits crying on the news. But what's happening right now in April 2026 is something far more dangerous because it's invisible. While you were sleeping last month, 500,000 people in the UK and thousands more via US fintech partners had their private financial lives exposed in a glitch. While you're watching this, the Fed and the Bank of England are stuck in a 3.75% rate trap while energy prices explode due to the conflict in the Middle East. This isn't just a dip, it's the beginning of the 2026 wealth reset. In the next few minutes, I'm going to show you why the old rules of buy and hold are dead, and the 3 moves the top 1% are making to turn this chaos into a generational buying opportunity. But before we look at the data, I have a confession. At the start of this year, on paper, I was winning. I was earning more than ever. My business was scaling, and my portfolio was green. But I noticed something. Even though the numbers in my account were higher, my life felt tighter. I'd go to the store, and the things I used to buy without thinking made me pause. I was falling for the high earner trap. If you feel like you're working harder than ever, but your bank balance isn't buying you the freedom it used to, you aren't crazy. You're just witnessing the death of institutional trust. Phase 1. The death of institutional trust. On March 12th, the Lloyd's incident didn't just crash an app. It allowed strangers to see national insurance and social security numbers. It was a mirror image of the security fractures we've seen at major US fintechs this year. Why does this matter for your stocks? Because the foundation of our entire financial system is trust. When you realize your safe traditional bank, whether it's a UK high street giant or a US Big Four, is one overnight update away from exposing your life, the capital starts to move. We are seeing a massive flight to quality. Smart money is moving away from traditional banking stocks and into hard assets and decentralized systems. If you're holding 100% of your net worth in a traditional checking account or a standard savings pot, you aren't safe. You're vulnerable. Phase 2, the energy trap and the 3.75% ceiling. Now, the math. The Bank of England and the Fed are caught at a 3.75% ceiling. In any other year, that might signal stability. But 2026 is a supply shock year. With Brent crude over $110 a barrel, we are in the scissor effect. 1. Your expenses, energy, food, rent are climbing because of the war. 2. Your savings are stagnant because banks won't raise rates to match real inflation. 3. Your purchasing power is being cut in the middle. This is why the 2026 crash won't feel like a sudden drop. It's a slow suffocation of the middle class. It's a lifestyle inflation trap designed to keep you working until your account hits zero. Phase 3, the Contrarian blueprint. So, what is the 1% doing? First, AI infrastructure. Look at US listed giants like Astera Labs or AppLovin. While the S&P 500 is sideways, the picks and shovels of the AI revolution are still projected for 20% growth. They aren't betting on the economy, they're betting on the tools that replace it. Second, defensive commodities. In a world of digital breaches, physical assets, gold, silver, and strategic land have become the ultimate insurance policy. Third, the 30-day liquidity rule. The wealthy keep a specific percentage in dry powder. When the Nasdaq or the FTSE slips into correction territory, they don't panic. They go shopping. But let's be clear, the 1% aren't just buying stocks, they are practicing capital relocation. While the average retail investor is glued to their brokerage app, watching their index funds bleed 1% a day, the wealthy are moving into infrastructure over speculation. Think about it. In the 1800s, gold rush, the miners went broke, but the people selling the shovels became dynastic. In 2026, the shovels are energy and compute. This is why you see massive capital flowing into modular nuclear reactors and AI specialized data centers. They aren't betting on the next big app. They are betting on the power grid that keeps the apps running. If you want to survive the reset, you have to stop looking at the price of your portfolio and start looking at the utility of your assets. Ask yourself, if the digital banking system froze for 48 hours, what do you own that still has value? If the answer is nothing, you aren't an investor, you're a hostage to the system. Phase 4, the psychology of the reset. The difference between those who lose everything and those who build empires is psychology. Most people complain about the system. The 1% learns how the new system works. Whether it's maximizing your ISA or your Roth IRA before the next tax shift, or using AI to automate your portfolio, action is the only hedge against inflation. This is what I call the crisis paradox. Most people view a market crash as a loss of money. The elite view it as a transfer of ownership. You have to understand that the world isn't getting poorer during a reset. The money is simply changing hands. The invisible danger I mentioned earlier is actually a psychological one, the normalcy bias. We spend our lives assuming tomorrow will look like yesterday. We assume the bank will always open, the currency will always buy the same loaf of bread, and the 9 to 5 will always be there. But the 2026 reset is the ultimate wake-up call. To build an empire in this climate, you must develop a mercenary mindset toward your capital. You cannot be loyal to a bank that leaks your data or a currency that loses 5% of its power every year. You have to move from a savings mindset, which is a defensive, fearful position, to an allocation mindset. You aren't saving for a rainy day anymore. You are allocating resources into a war chest for the greatest asset redistribution in our lifetime. The reset isn't happening to you. It's happening for those who are brave enough to see the system for what it actually is. Phase 5, Resolution. 2026 isn't the end of the world. It's just the end of the world as we knew it. You can either be a victim of the glitch or the architect of your own recovery. I've put together a 2026 wealth checklist, the exact assets I'm watching to hedge against this energy shock. You can find the link in the top comment. If you found this helpful, hit subscribe. We're tracking these shifts every week so you don't get left behind. Stay sharp. I'll see you in the next one.